Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on Magna Mining, traded on the TSX.V under the ticker NICU, and on the OTCQB under the ticker MGMNF. And we are joined today with the CEO and Director of Magna Mining, Jason Jessup. And Jason, it's always great to get you on the KE Report to get an update on Magna Mining. I wanted to get you on just because I think you've hit a key milestone as a company, and that is on the news release you put out on June 4th, you announced the signing of a toll milling agreement for the 109 footwall. And this is a bulk sample that you're going to send over at the Crean Hill Project. Just as a reminder for people listening in, the company has two different projects, Shakespeare and Crean Hill. But what I find impressive, Jason, and I was telling you this off mic, is there's so many companies that have a trial balloon that, hey, maybe one day we'll do some toll milling on this and we'll partner with somebody. And they never do, and they never follow through. So the reason I wanted to get you on is I see this as keeping your word. And I think it's also important because it highlights the advantages of working in Sudbury, where there's hungry mills and processing centers to feed. The area is well established. And so it's easy for you to set something like this up. And then it's easy to see how you could do future agreements for more toll milling. So let's maybe kick it off there with just the advantages of Sudbury hitting a milestone and got to generate some revenues for the company now.
Absolutely. Thanks a lot, Chad. And it's great to be back on your show and update your listeners on what Magna is doing. It is a super milestone for us to get this agreement in place. Now we have two agreements. The first that we announced back at the end of March is with Vale, and that is for all of our resource we mining in our advanced exploration program, which currently we have outlined at about 400,000 tons. And then, more recently, just a couple of weeks ago with Glencore to do some toll milling. And that specifically will be on our 109 footwall zone. So we're going to take a 20,000 ton surface bulk sample of this high PGM copper nickel zone that comes right to surface and then process in a batch. So exclusively through their mill over the course of about a week to try and determine how we can optimize the recoveries of these PGMs within this footwall zone. So it's a really exciting opportunity for us, and it's really great to be working with both Vale and Glencore and Sudbury, the two owners of the underutilized mills here.
Yeah, Jason, we were taking bets on was it going to be Vale or Glencore that you eventually partnered with, and you partnered with both. So a great outcome. Maybe speak to a point you just made in there, though, that you do have, in addition to nickel, and you're known as a nickel forward company, you do have a lot of precious metals content in some of these samples in the footwall zone, the platinum, the palladium, and gold. So maybe just speak to the mineral makeup that there's more than just nickel going on in this deposit.
Yeah, absolutely. And it's very typical of Sudbury. Sudbury is known as a nickel camp, but it actually has overall throughout the camp about a 1-to-1 nickel to copper ratio. So a lot of copper, and there's a lot of copper in our deposit, especially in the footwall zones. But there's also a tremendous amount of precious metals, and people often forget that, or they don't realize how much precious metals. But in our current resource from November of 2022, we have 1.7 million ounces of platinum, palladium, and gold as a byproduct. And in some zones, such as our 109 footwall zone, we've had some spectacular grades, up to 1 ounce over many meters. Typically, I would say that zone is between 5 and 10 grams of platinum, palladium, gold combined, with lower nickel and copper. But yeah, Sudbury and specifically the Crean Hill deposit does have a lot of precious metals, and it gives us great optionality. When we look at, future financing, one of the options that it allows us is potentially a royalty or stream on those precious metal byproducts.
Yeah, I'd like to maybe tug on that string for a second, Jason, just because we've talked about that in the past. The optionality that all these different metals give you as a company when looking at the capital stack to do different things. And I think a lot of people underappreciate the amount of copper that's in the deposit along with the nickel, but they've underappreciated this precious metals component. So a lot of people are wondering, yeah, but how are you ever going to get things built where you'd have a standalone with Shakespeare and Crean Hill? How could you ever do that? And this gives you just a little more optionality, but it also ties into the fact that before you do any other, exploration of that kind of idea with potential partners, strategic shareholders, you still want to update the resources to show everybody exactly what you've done from all the prior drilling just over the last year or so. So maybe just speak to, in your resource as they stand today, When was the cutoff of the drilling? How much drilling have you done since then? And when are you going to look at doing a resource update?
Great question, Chad. So our resource currently, our NI 43-101 mineral resource estimate, is from November of 2022. And it is based solely on the drilling that was done by Inco while the mine was in operation. And then when the mine closed in 2002, the drilling that was completed by Lonmin Canada up until the time we acquired it. So none of our drilling we've done since acquiring the property, and we've had some spectacular results, especially in our FootWall zones, has been incorporated into this current resource. So we have started to wireframe and plan out, how we will remodel this resource, incorporating the approximately 23,000 meters of drilling we've done at Crean Hill since acquiring it. And our plan is to have a resource update out in Q3. And again, to put some, I guess, expectations and thought around this, most of our drilling has been in the footwall to try and better define the high grade 109 footwall zone, as well as the 101 footwall zone and the 105 footwall zone, which are three known footwall zones that are different than the typical contact mineralization that is what has been mined in Sudbury for 125 years. These footwall zones have only really been exploited in Sudbury for maybe the last 30 or 40 years. And at Crean Hill, shutting down, over almost 22 years ago, really wasn't understood. So that's where a lot of our drilling has been focused. So the footwall zones right now make up a relatively small percentage of the 31 million tons of indicated resource that we have in our MRE. But, we think what's going to come out of our updated resource is better definition, more reflective of the high grade in the footwall zone where a lot of this drilling has happened. And it's going to really set us up for an updated PEA, looking at how we're actually going to mine these zones now that we have a much better understanding of them.
Well, and just looking ahead, more of a forward-looking statement, once you get the resource out, let's say in Q3 of this year, and everybody can have better visibility on all the different mineral content, where the resources are at, incorporating all the 23,000 meters of drilling you've done to date. What would some of your options be as far as would you continue to start doing toll milling and keep ramping up revenues during a period of time? Would you start looking at what kind of a capital stack you would need to build a standalone location? Maybe give us a look ahead at how things are looking as far as a general game plan.
Yeah, and speaking again to the reason why we love, operating in Sudbury is there is a lot of different options for us. With now agreements in place and relationships with the two owners of the mills here in Sudbury, we can send ore to either one of those mills. Right now we're looking at just a short-term commitment from our side as we figure out exactly what a long-term life of mine plan can be, incorporating all this new drilling we've done since acquiring the property, but also to build our own mill at Shakespeare, where we have all the permits in place for a 4,500 ton per day mill. We have an open pit deposit right there, and it's at a feasibility stage. So right now, we're going to look at all those options. Ideally, I think where we'll land is at least 2 or 3 years of toll milling. Once we get through ADEX, with that presumption that it's going to go well, and we are going to be able to, mine very effectively. We have terms that we're quite pleased with from Vale. Extending that contract, we believe, is very doable, and continue to be shipping ore to them in the future. And then using that cash flow along with, the potential for other funding from, royalties or streams. There's a lot of precious metal byproducts at Shakespeare as well as some of the opportunities for both U.S. Department of Defense and Canadian federal government support for critical minerals projects. And we've applied for a number of these types of grants for Shakespeare. So there is a number of ways we could potentially fund and build Shakespeare and then be able to process our own ores. Or we could, look at the option of continuing a long-term contract if Vale and or Glencore incentivize us to invest into the mines, perhaps other properties in Sudbury we may acquire in the future. So a lot of optionality, but yeah, our base case over the next few years definitely will be toll milling, and then we'll weigh it from there.
Well, it's exciting that you just have so many different options available, and the toll milling does bring in revenues, which is great because a lot of companies go broke drilling themselves into the ground, but you will have a way to basically have an ATM machine to keep exploring with some of the revenues coming in from that, but also learn a little bit more about the deposit. Once you actually start mining it, you always learn something. And then you have those options to continue to toll mill and or build your own. You've got options with royalties. You've got options with building a standalone process to look at that, as well as all the different partnerships there in Sudbury. So exciting times for the company and multiple paths forward. Another thing I think we should highlight, though, is the news you just had out June 11th. And this is where you were awarded the 8X contract for Crean Hill. And this is with the First Nations group there. Maybe speak to that as just another social engagement win and milestone for the company.
Yeah, as we've planned out our advanced exploration, we started a competitive process to award the contract for that contract mining probably back last fall. And, we're very, very pleased to award it to ADLP, which is a joint venture partnership between Atikamekw and Nishnabek, the Wanapate First Nation, and Technica Mining, which is a longstanding mining contractor, has been operating in Sudbury for about 25 years. Very good reputation. And combined with the local First Nations, it does check all the boxes we're looking for, with a great track record on safety, being able to execute well, and giving back to the local communities. And, we really do believe in reconciliation with our local First Nations. And Sudbury is mined for a long time, and in my opinion, they have not benefited enough from it. So it's great to be able to utilize their businesses. They see the benefit, they appreciate it, and we appreciate having them as partners to work on this project.
Yeah, nice to just see good social engagement, solid partners, the kind of groups you want to work with anyways, and it's nice that it's a win-win for everybody involved in the community. And lots to go as far as the drilling. So let's talk drilling, let's talk exploration. We've talked a lot about the big picture of where things are developing. We've talked about the milestones of, starting to get some revenues coming in from bulk samples and future toll milling. But a lot of people want to know, Jason, what about all the other blue sky on the property? What other drilling do you have planned for this year and next?
Yeah, I love talking about exploration. It always makes me smile. It's an exciting part of our plans here in Sudbury. Currently, we have 3 drills turning. 2 are at Crean Hill, and 1 is at Shakespeare, and doing regional exploration drilling. So we're not drilling directly around our Shakespeare deposit that we currently have. We are looking throughout our 180 square kilometer land package around Shakespeare in search for that next economic deposit. And really, there has not been a lot of exploration over that land package. It was tied up within another company before we acquired it. They were fairly cash strapped. All of the drilling was going into defining the Shakespeare deposit itself. So there really has been, a very limited amount of exploration. We've done a number of airborne surveys, including a recent ZTEM survey over the property. And so now we've combined all of the data we have, including, ground truthing and mapping and field work, to develop a handful of targets that we think have all the right ingredients and the potential to be standalone economic deposits. And we're drill testing those now. So very exciting, in areas that have never been drilled before, where we do have, geophysical anomalies. We do have the right rock types. In many cases, we do have some nickel copper PGM style mineralization on surface already. So very exciting program going on there. And at Crean Hill, we have both our deep footwall drilling, which I've talked about a few times, and it is ongoing. And really what we're trying to do there is discover a new footwall deposit, similar to other deposits that our team has discovered in Sudbury, further back into the footwall. So the 109, the 101, the 105 footwalls, those are immediately behind the contact deposits. They start basically where the contact deposits end, and go out sort of perpendicular into the footwall from them. But these breccia corridors that host those deposits continue, and they continue for long distances into the footwall. And what happens is fluids, when these deposits are forming, these contact deposits are forming, fluids can travel out along these corridors. And some of it will deposit immediately behind the deposits, but others will travel for sometimes, hundreds of meters back into the footwall. And find the right environment, we have the right temperature, the right geochemistry, and then form these high-grade footwall deposits. And as I mentioned, members of our team previously, either with Inco or with FNX Mining, have discovered these footwall deposits, and they can be absolutely spectacular, company making type deposits. So that we have one drill focused on that, drilling deep holes. And some of these holes are 1,200 meters deep. So they take time. We're doing borehole geophysics and as well as borehole gravity surveys down these holes. We have a number of anomalies we've identified. So that exploration is still ongoing, very exciting. It is really swinging for the fences, looking to hit a home run. As well as we have a second drill that's looking to further define and extend the 109 footwall at depth. So this is the area where we'll be doing the bulk sample I was saying on surface. Well, the 109 footwall follows the spine of the main deposit, which was historically mined by Inco down to 4,500 feet or about 1,400 meters below surface. The 109 footwall has only been defined for about 1,000 feet below surface. And below that, there's indications from the few holes that Inco had drilled while the mine was in operation, and then assayed in the footwall that we have these high PGM, high copper zones in the footwall, but they have not been drilled to the point where they're in resource right now. So the other second drill will be looking to better define and drill some of those areas. So lots of exciting drilling going on right now, and we hope to have at least monthly updates on assay results as they come in.
Well, definitely keep us posted as more of those results come back in, and we'll get you on to take a deep dive into some of the exploration at that time. So yeah, a lot of news flow from the company as far as all kinds of things from the development side and from the bulk sampling side, new agreements in place, but also all of this drilling. And so it's going to be exciting to follow along with all the news from Magna Mining. I guess just as we wrap up, Jason, it's hard to summarize exactly what Magna Mining is, so maybe you could do that for investors, because you've got nickel, you've got copper, you've got PGMs, you've got gold, you've got all this drilling and that side of the business, but you also have a clear path to development. So how would you like people to think about Magna Mining in the spectrum of different companies in the sector?
Yeah, that's a great question. And we get that often. And, the best answers I've given, I think, and what other investors have told us is, we're a real mining business. We're not just about promotion. We're not looking to just hopefully hit a big hole and get sold quickly. We have a plan to grow into a multi-billion-dollar company. We're executing on that plan. It has many facets, including, near-term production, explorations, discovery, and success, but as well, other acquisitions like Crean Hill, which we acquired in 2022. And we see opportunity to acquire, we believe can be some very, accretive prices, additional deposits that are existing in Sudbury owned by the majors. So we see a lot of growth potential. We have a vision to become a multi-mine producer in the next 3 to 5 years, with Crean Hill being the first one, but we do have plans for others, and Shakespeare as well could be one of those. But lots of potential to grow, and we're really creating a business that will have cash flow and be able to reinvest that and grow in Sudbury. And it's a jurisdiction we know extremely well. And I guess for those, to compare it to other companies, the only company it's a real comparable is one that myself and a lot of our team, including our COO, our senior vice president, or VP of exploration, have worked at before, and that's FNX Mining, which started off in Sudbury doing the same thing we were doing back in 2002, acquired some past producing Inco mines, did some drilling, brought 3 of them into commercial production, were acquired for 1.8 billion. That's probably the closest analogy of the business model that we have right now.
All right, we'll wrap it up there, but you put the band back together just like FNX, you're doing it again, and you're, like you say, a real mining business here with a multi-pronged approach for growth and legitimately looking at a development scenario where you can grow and possibly bring in other deposits into the fold. So definitely a story we want to keep following along with here at the KE Report. And if people listening in want to follow along with the news, definitely click on the link below this interview. It takes you directly over to the Magna Mining website to their news section, so you can follow along as well. Jason, keep us posted as more news comes out. We'll get you back on the show for an update, and looking forward to our next conversation.
Thanks a lot, Chad. Really appreciate it.